Today, I want to teach you some market psychology that might turn you into a consistently profitable trader. It definitely helped my trading, and it is only a small adjustment on how to view the market, but it can make a really big difference. Before we start the video, I'd like to remind you that I am doing a giveaway once I hit 1,000 YouTube subscribers. I'm giving away a $10,000 prop account for free. So please remember, like, comment, subscribe, and let's jump into the video. So first, I'm going to teach you what the market psychology tips are, and then I'm going to show you how you can integrate that into your trading. The first market psychology idea is that you can be three different things in the market. You can be a buyer, you can be a seller, or you can be a bystander, where you're not in anything, you're not in long or short, you're just waiting on the sideline, patiently waiting for a better time to take a trade. Now, the next tip and the main psychology idea, which a lot of retail traders get backwards, is this. So as the market extends higher and higher, let's say it keeps going higher and higher here, the more likely the sellers are to step into the market. And it's vice versa. It works exactly the same. So the lower we get into the market, the more likely that buyers are going to step back in and push price in the opposite direction. So why is this? Why does this happen? It's because the buyers in the market want a better price before they go long. So if price is already extended, and let's say this is an all-time high, are buyers going to be wanting to buy here or here? They could want to, but they may be more likely to buy at a deeper location because then they could hold the trade all the way until it reaches back into the all-time high and then gives continuations. So they get a discounted price. They're buying at a lower level, a lower price, which gives them more profit potential. And the same for the sellers. So are the sellers going to want to keep selling after this huge extended move? They could, and it could keep going down, but they will get a better price if the market retraces and pulls up to a better location before price can continue, or they just get a small reaction off of their trade. But it gives them more benefit to wait for a better price for either the long or the short. So how does that integrate into the intraday mindset of being a day trader? So a lot of people will look at, I'm getting momentum intraday, I need to go long. But we need to take a step back and look at the market and analyze it in terms of the higher time frame traders and the intraday traders. So the higher time frame traders are going to be waiting for very specific locations for price to come back to that gives them a better price and can give them more profit. So if I'm intraday and we had already had this huge move up of, let's see, let's count it, 75, 77 points, is it likely that price will just continue going up without any reaction coming down? It could happen, but I wouldn't say it's likely. I think it's more likely that the higher you get into this previous down move, that you're going to get another down move and where sellers are going to step in. Now, are sellers more likely to step in here or at a higher level of here, here, or here? Well, the higher you get, the more likely you're going to be that you're going to get a strong reaction to the downside, as long as all the levels are equal based on confluence and all the other odds enhancer ideas. But all levels being equal, just the price difference, you're more likely going to have stronger sellers at a higher level because they're getting a better price that can give them more profit potential on the downside. And the same works for the buyers. So the way that I use this in my trading is, number one, we have the idea of exhaustion. If price can exhaust itself in one direction with a big, strong directional move without any substantial pullbacks, and you're getting into a deeper level where you can see sellers start to approach the market, potentially you can take a stab at that level because their profit potential is better and you can get a stronger move away because of that. It can help you decide which levels to take. You can be much more selective with your risk and say, I don't want to take a trade at the first level or the second level. I'm going to size up on my trade at the third and fourth level because it's a better location for sellers to come into the market. A lot of retail traders will look at this big move up and say, oh, it's going long. I need to get in long. The direction is long for the day. But you need to look at it in terms of higher time frame and where's the discounted price for who. So the better price right here, is it better to get in at the top here for buyers or for sellers? The answer is going to be for sellers. At the bottom, at the low, is it a better price for buyers or for sellers? It's a better price for buyers because they have more profit potential than the sellers do. And then in the middle, you can be a bystander, sit around. Maybe it's not clear yet, or maybe you take a stab at it short because you think it is still a good price for the sellers to enter. But it's just the concept that you have to bring into every single day. And this is something that you could actually do beforehand, before the market even opens. So if we replay this day before it even happens, we can have this concept in our mind of where's the best price going to be for buyers and for sellers. So if price continues to sell down into these levels, this isn't an area where I'm going to want to sell at. This is a higher time frame level where buyers can step back in. This is a very high time frame level that buyers can step in. And I'm not going to want to be getting in short, because the lower down we go, the more likely it is that the buyers are going to step back into the market and react, because they are getting a better price and have more profit potential. So yeah, that's the general idea. It can help your trading a lot. Let me know if you have any questions in the comments below. And remember, I'm doing a giveaway. Once I hit 1,000 subscribers on YouTube, I am giving away a free $10,000 prop account. Thank you, and I'll see you next time.